5 minutes. 3 months of day trading profits during my PhD. Gone. One revenge trade. All in. 10 times the position size. This was mistake number 4. But it wasn't the only one. 4 mistakes total. $12,000. 12 months as a day trader. Let me take you back. Master's degree, day trading, chasing 90% win rates. I'm a PhD in mathematics now. These mistakes, unavoidable, but you can prepare. This is mistake number 1. Have you ever spent months trying to find a trading system with an 80 to 90% win rate? I used to be exactly like that. I believed that all I needed was a high win rate system to get rich. When I first started trading, I was watching videos, reading materials, and hunting for holy grail indicators every single day. If I lost just a couple of trades, I would switch methods, sometimes changing things up 2 or 3 times a week. And to achieve that dream 80 to 90% win rate, you are forced to aim for tiny profits, small take profit, and accept a huge stop loss, high risk. Until one day, I realized that a high win rate actually didn't help me make money. The entire game is about risk to reward, RR. It only takes one single loss to wipe out everything, and that is why a high win rate is meaningless. Let me show you that pro traders focus on risk to reward of 1 to 2 or higher. You only need a 40% win rate to be profitable. That's right. Now look at this table with the mindset of a pro trader. Our risk to reward is 1 to 2. That means you risk $100 to potentially make $200. Let's say out of 10 trades, you only win 4, a 40% win rate. Those 4 wins bring in $800. 6 losses cost you $600. The final result, you are still up $200. Even with a 40% win rate, that is the true power of RR. This is the mindset of a professional trader. Optimizing profit for every dollar of risk. Don't let your ego blind you with high win rate numbers. You must prioritize risk to reward and risk management above everything else. In a market as volatile as this, give yourself the permission to be wrong more often, as long as your wins are substantial. But here's the cold, hard truth. Even if you perfectly master RR, you can still fail miserably if you turn your system into a cluttered mess of indicators. And that brings us to mistake number 2. After escaping the illusion of a high win rate, most new traders, including my former self, fall straight into the second trap, overcomplicating things. You start believing that the more stuff you have on your chart, the smarter you are. I used to think, if one indicator is good, then 5 must be 5 times better. So I turned my trading screen into a spaceship cockpit. MACD, RSI, Keltner channels, multiple EMAs, SMAs, you name it. But it doesn't stop there. Those who think they're smarter go hunting for the 100% perfect confluence across every school of thought. Look at this candle. This is the exact price action signal traders hunt for at a major resistance level. At the same time, RSI crosses below 50 and the MACD histogram flips negative, precisely what indicator traders are waiting for. Look closer. Trend traders want this candle. Even SMA and EMA traders are eyeing this exact same signal. It looks like a genius move, but in reality, it's just self-torture. The truth is, the more indicators and methods you pile on, the deeper you fall into analysis paralysis. Backtesting becomes impossible because it's too complex. You waste hours just trying to find a reason to enter one single trade. And finally, you either enter too late or you don't enter at all. And just like that, 3 months vanished. I spent 3 months wrestling with complexity only to realize that even a simple SMA, if used correctly, can make money. That's the moment you know you're starting to mature. Congratulations! If you're still watching, you just saved yourself 6 months of struggling to learn these two truths. But even with a simple system, you will still fail. If you are trading based on blind faith instead of hard data. And that leads us to the most dangerous trap of all. Mistake number 3. Let's say you have a simple system, a great R:R, and everything looks perfect. But then the market turns against you and you lose 3 trades in a row. How do you feel? Panic, doubt, and then you switch methods. Why do you panic so easily? Simple. You've never seen your system perform during the tough times. You have no idea what its maximum losing streak is. You're just too lazy to backtest. Most new traders see backtesting as boring, a waste of time. They want money right now. But professional traders are different. They trade based on probabilities, and backtesting is exactly what provides the data. I always start by backtesting at least 300 trades. I know for a fact that my longest losing streak is 10 trades. So when I lose 8 trades in real life, I don't panic anymore. I know I'm just 2 steps away from the bottom of that streak, and the odds are a win is just around the corner. Oh my God. Do you see something strange looking at this backtest equity curve? There were periods of steady growth, but then I hit a 10-trade losing streak. Twice. But that's not even the worst part. The most brutal stretch was when I traded nearly 100 times and my account plummeted from 50,000 down to 30,000. And it gets even more frustrating. After that crash, my capital went nowhere for almost 30 more trades, before finally hitting a long-term stable uptrend. The solution is clear. Backtesting isn't just glancing at old charts. It's a rigorous process of applying your entire rule set to 100 or even 500 historical trades. Your goal is to find 1. Your real win rate and R:R, not the numbers you imagined, and 2. Your maximum losing streak, so you know exactly what you're up against. Trading losses don't just hit your wallet, they break your mind. It's that dark moment when something inside you finally snaps. And you stop being a trader. You become someone else. That's why mistake number 4 is unavoidable. Let's face the demon that's secretly destroying your rules. Is this the final mistake? And also the most dangerous one? It can destroy months of your trading progress in just 5 minutes. You have a simple method. You've done the backtesting, everything was clear. Then suddenly, one day the market doesn't look like anything you've seen before. You lose 3 trades in a row. Immediately, doubt, frustration, and fear explode. You start telling yourself, this system is useless. I need to get my money back now. And this is the death trap that 95% of traders never survive. When emotions take over, you're no longer trading a system. You're trading the pain inside your head. You forget that in backtesting, losing streaks are normal. And you flip the switch to revenge trading mode. You break every risk rule. You 10 times your position size. Or worse, you go all in on a random setup. Your account evaporates faster than a blink of an eye. The critical question is, how do you kill this demon before it kills your account? And if you're still here, congratulations. You've just saved yourself 12 months of painful failure that most will never escape. But we're not done. I'll share my own story and how to kill the demon in the next videos. Don't miss it.